A few months back, I set out on a mission to find safe and stable ways to make passive income during the bear market. I explored countless ideas, projects, and strategies, assessing the risk, consistency, and passiveness of each one. Some did well, some did horrible, but by far the one that has performed the best is what I call the Ghost Tiger strategy. This strategy involves using a trading bot to trade crypto and profit off the volatility of the market. Basically, as long as prices are moving around, they could be moving up, they could be moving down, they could be moving sideways. As long as they're moving, I can make passive income off of the market. And I've been doing this strategy for a month now, and I've been making some ridiculously good yield with pretty low risk. And in this video, I'm gonna detail exactly how much I was able to make using this strategy for a month, as well as do a quick update on my other low risk passive income strategies and how much I was able to make with them over month 2. First off, to kick off my quest to find the ultimate bear market passive income strategy, I created a post on YouTube and I created a post on Twitter asking the community what strategies were working for them. And I got a lot of responses, and some of the ideas were ideas that I'd heard of before, and other ideas were ideas that were completely new to me. And while many of these were really interesting ideas, none of them seemed to be exactly what I was looking for. But what I've noticed is when you're looking for something that's hard to find, and when you spread the word far and wide that you're looking for this thing, more often than not, what you're looking for seems to find you. And that's exactly what happened to me. One evening, I had my father-in-law over, and I had mentioned what I was looking for and kind of the idea of the strategy I was after. And he had mentioned that he had recently stumbled across a strategy that might be exactly what I'm looking for. He said that the strategy involved using a trading bot to profit off of market volatility. Now, I've used trading bots before and I've gotten some pretty decent results, but I've never found a trading bot that performs well when the market isn't going up. So I was a little bit skeptical. Then he mentioned that he had been testing this strategy for about 3 months now, and so far it had been performing flawlessly. And it's the 3 months part that really caught my attention, because the last 3 months in crypto have been just an absolute literal nightmare, where we saw Terra Luna collapse, we saw Celsius collapse, we saw Voyager collapse, we saw Three Arrows Capital collapse. And so if he's saying that this bot performed during maybe one of the worst periods in all of crypto history, then I had to take a look at this thing. So anyways, I asked my father-in-law if I could come over the next day so he could show me this strategy in person, and he said yes. And really quick, you're gonna wanna stick around to the end of this video, because I wanna be sharing not only the results from this experiment, but also a bunch of other experiments that I've been running for the past 2 months. The next day, I brought over my laptop and I was ready to learn, and he spent the next couple hours going over and explaining in depth how this strategy works. And basically, the strategy uses a bot and an algorithm to place buy and sell orders at different intervals on the chart. And the more the price goes down and up and down and up, the more money the bot makes. Meaning basically that the yield from this bot comes from market volatility. And we know crypto can be insane volatile. And so as I'm hearing all this sounded really promising to me. This strategy was producing a real yield coming from market inefficiencies, but I wanted to understand what the risks were. And when I asked my father-in-law about the risks, he said he wasn't really sure exactly what the risks of using this type of strategy were. So I had to end up doing a little bit of digging on my own and really understand the fundamentals and the nuts and bolts of this type of strategy. And digging deeper, I was able to identify a couple different risks. Basically, this strategy uses trading pairs to operate, meaning it would take the money that I deposit and it would split it into 2 different tokens. One token might be a stable coin, and the other one could be anything. It could be Bitcoin, it could be Ether, it could be ApeCoin, it could be Litecoin, it could be whatever, other coin that I decide to choose. Basically, what the bot would do would be, as the price is going down, it uses those stable coins to buy more Bitcoin. So as the price goes lower and lower, you're accumulating more and more Bitcoin. And then on the opposite side, as the price is going up, it's selling off that Bitcoin into stable coins. So the higher the price goes, the more stable coins you accumulate. The lower the price goes, the more Bitcoin you accumulate, or whatever token, I end up choosing. Which to me meant that the risk would vary dramatically based on the settings and the token pair that I ended up choosing. Certain combinations of the settings in the token pair would equal extremely high risk, and other combinations of the settings and the token pair would equal extremely low risk. And looking at my father-in-law's setup, I could see right off the bat that it was a lot higher risk than what I was looking for with this strategy. But still, I felt like if I adjusted the settings in the token pair, I could get this thing down to a lot lower risk and then just see if it was able to still produce a decent yield. So after all this, I got down to work and I really just dove deep into this thing. I read through all the documentation and really broke down and dissected the strategy that my father-in-law was using to try to take the best parts from it that were working and incorporate it into my new strategy. And after a lot of work and a lot of long hours, I did all the math, I adjusted the settings, picked new token pairs, and created a new lower risk strategy that could hopefully produce some sort of decent yield. And after my first week of using this strategy, the results I got were insane. I had made 1.5% in just a week, which if you don't know, that's a lot for a low risk strategy. But even still, I had spent the past week studying it even deeper and really just toying around with different ways that I could do the strategy to try to reduce the risk further, because I was still kind of freaked out, like it was a new thing and I wanted to reduce the risk to as low as physically possible. Because again, my goal isn't the highest yield possible, it's to have a low risk strategy that produces a decent yield. And after the second week of testing, the results were again pretty good. I don't remember exactly what the results were the second week. They were around 1%. It was like 1% something. It was good enough that I was like, okay, this thing is low risk. It's producing a decent yield. It's time for me to step this thing up. And I might have went a little bit overboard with how much I raised the capital I had invested in the strategy. I was just really excited about how good it was working and really excited about the potential and just really to get it. I wanted to get it going. Okay. I wanted to get it going and get some results. So I raised it to $90,945, which is a lot of money to me. Okay. That's not like a drop in the bucket. That's like, hey, I'm really throwing a Hail Mary with this one and really testing it out. I felt like I understood the risks really in depth and I felt comfortable with this. And in my mind, I was just expecting this thing to do the same thing it's been doing, right? The first 2 weeks, it did about 1%. So I was like, it's going to keep doing 1%. I've tested it 2 weeks. Like, what could go wrong? But unfortunately for me, that is not how things went. Not even close. Okay. For whatever reason, whenever I decide I'm going to put a lot of money into something, that's when things seem to go the worst. Week 1 was not so great. The tokens that I was trading with fell substantially in price. And because of that, my overall profit and loss dropped from $1,300 worth of profit to at $1,300 negative. And while it was kind of not fun to look at, this is actually how the bot works, so it wasn't really as bad as it appeared. Basically, the bot was doing exactly what it was supposed to do. As the price goes down, it's supposed to be trading the stable coins for the token I had chosen, with the overall intent that as the price goes back up, those losses should turn into massive gains. So although in the moment I was seeing a loss, all I needed was for the price to go back up, even just briefly, for that loss to turn into a massive gain, which is exactly what ended up happening as the price bounced back and forth over the next 3 weeks, to where by the end of month 1, I'd made $7,013.71, or 7.7%, which is insane. Another way to picture it would be if I had $1 million in this strategy, I would be making $77,000 passively a month based off month 1's results. Or say I just put $20,000 into this strategy, I could be making $1,500 a month passively, which is about the same as the average rental property makes, only you're just spending $20,000. Granted, this is just 1 month of testing, and honestly, I feel like there needs to be a lot more testing that takes place before I can say this is a consistent, stable strategy. So, I mean, we'll see as time goes on. And for anyone interested, the platform that I'm using to do all these strategies is a platform called Bitsgap. I'm not sponsored or anything by Bitsgap. I do have an affiliate link in the description if that's something you want to use. You don't have to use that. You could just go to the website, I guess, if you want to. But if you do use the affiliate link, I think you get some sort of bonus, like you get like a longer trial period or something like that. If that's something you're interested in checking out, there's a link in the description of this video. Otherwise, you could just, I don't know, you really even have to use that platform. You can use whatever platform you want. All right, so as far as my other bear market passive income strategies, let's really briefly go through my month 2 results. My first strategy was using something called USD Plus, which is probably my lowest risk strategy that I've found so far. It basically only involves using stablecoins. If you want like a more in-depth explanation of how it works, you'll watch my month 1 video where I kind of talk a little bit more about it. I put in $1,309 2 months ago, and so far after 2 months have made $22 or about 20% annually. Which I'm sure some of you guys are thinking, you only made $22, what's the point? Well, if I had $1 million in this strategy at 20% annually, I'd be making $200,000 passively every single year. So 20% annually is actually a lot. It's just I only have $1,300 in this strategy, so I only made 22 bucks. And again, you got to remember the intent of this strategy, which is originally I just had my money sitting in stables. Instead, I want to find a safe place I can put my money where I can just make something rather than make nothing. Second up is Penrose, which is like a yield farming strategy, again using just stables. I've been doing this strategy for 2 months and I've never lost money. It's like my balance has never gone below the initial capital I put in. That's because, you know, the initial capital I put in was all in stable coins, and it always stays in stable coins. It's just producing an extra yield. I originally invested $8,601. In month 1, I made $72 profit from this strategy. And for month 2, I actually decided to increase the amount I had invested in this strategy to $18,691. And so far over month 2, I've made $301 from farming and $139 from half of my liquidity being USD plus, which even though it's liquidity, it still is increasing in value, bringing my total made for month 2 to $440, which is about 27% annually before compounding. And really quick, before I get to my third strategy, just to be ultra clear, none of this is meant to try to persuade you to try to use any of these different platforms or try any of these different strategies. This is just my digital journal documenting exactly what I'm trying and exactly what I'm doing with my own wealth to try to hit my $100 million goal, with the intent of educating people so they can learn with me along the way through my different mistakes, my different trials, the different things I try, and hopefully glean something from it to help them on their own journey to making $1 million or whatever they're trying to build their wealth to. Third up is Overnight's ETS strategy, and this is another fully automated strategy, but this one isn't using stablecoins. This one's using Matic instead of stablecoins, and it's using Aave in some capacity. I actually don't fully understand how this one works. I got passed a recommendation to try this strategy from someone that I trust, and so I decided to try it out, give it a go. I put $9,520 into this strategy 1 month ago, and so far after 1 month have made $214 or around 26% annually. So that's a really good result for month 1, but Matic also did exceptionally well over this last month, so I'll be excited to see kind of how it maybe levels out over month 2. We'll see. Finally, there's yield nodes. And if you watch my last video, you'll have noted that I had some concern about yield nodes and the risk factor of using it during a bear market. And I was actually able to jump on a call with the head of yield nodes. He was a super awesome guy. He was super just easy to talk to, completely transparent, answered all of my questions. And he said that me viewing yield nodes as a low risk strategy was actually incorrect, and that they internally view yield nodes as a high risk strategy, and that anyone investing into yield nodes should consider it a high risk strategy. And maybe that's from me. Like, I've been using yield nodes for like months now, and I've never lost anything. I've only made money, and I've met people that have been using it for years, like multiple years, and never lost anything. So for me, I'm thinking in my head, like, this is a low risk strategy because, like, look at all this history of it doing a good job. But he said that's incorrect. It's to be viewed as a high risk strategy. Based on his recommendation, I'm going to be removing yield nodes from my low risk passive income strategies. I'm not going to take my money out, but I'm not going to put any new money in. This month, I made $2,362 from yield nodes, with initially depositing $20,000 4 months ago. Overall, this month, I made $10,051 in passive income from these strategies, which obviously is amazing, but I'm going to really need to step it up if I want to get anywhere close to my $100 million goal. And as I stated earlier, if you're somebody who's just getting started, obviously you're not going to have as much capital as I have to deploy in these different strategies to make this kind of passive income. But I think the takeaway is there are things out there like this that you can do, that your money isn't just for spending, but you can actually take your money and put it to work for you. Even if you have a little bit of capital to invest, you can still take that capital and put it to work for you rather than letting it sit and rot away in a bank. As always, if this video was helpful, make sure to hit that like button. If you have any questions or comments, or you have another strategy that you think I should try, let me know in the comments down below. And if you want to see more videos like this, make sure to hit that subscribe button, and you got to hit the little bell next to it if you want to actually be notified each time I release a video. Thanks for watching, and I'll see you next week.